From Rabobank, this is a Rabo Research Food and Agribusiness podcast.
Hello, welcome to another episode of Consumer Foods to Go Wrap, the show where we wrap up all what is interesting and moving in the world of consumer foods, retail, food service, on behalf of Rabo Research, where the three of us work. There's Tom Bailey and there's Maria Castroviejo, and I'm Cyrille Filott, strategist for consumer foods, packaging and logistics at Rabo Research. We've done two episodes before, and this is actually a special one because we are going to wrap up the year, not the month, which we did in the previous two episodes. We're going to wrap up the year of 2025. And just to timestamp it, this is recorded on December 17th. So anything that happens between now and the end of the year, we will cover in the January episode, but not in this particular one. And for those that haven't listened to the two previous episodes, we have a bit of a structure. There's a hello and please be seated section, which was this one, as in the introduction. And then we move over to the menu, which is discussing topics that are front of mind, in this case, the year in review. Then we'll move to the specials, the best of Rabo Research. Anything that Rabo Research has produced that is really important, and we think our audience should know about. We move to made to order, questions from clients, questions from listeners, or in this case, actually, the outlook for 2026, one big topic that we expect to see changing. And lastly, we wrap up and we call that section the bill. Welcome. That was a long intro. Sorry, guys. Maria, Tom, welcome.
Thank you. Good to be back.
Thank you, Cyrille.
Yes, great. Hey, that was the first bit. Let's move to the menu. And we've had a crazy year. Perhaps I'm trying to find the right word, but in food, well, in anything really, but in food, we had a phenomenally crazy year. Perhaps for each and every one of us to highlight one thing that you thought stands out when reminiscing, is that a proper English word? Looking back at 2025 and just thinking through, okay, this is what we should never forget. Tom, what would be that for you?
Yeah, it was a huge year. A lot of things happened. It's tough to pinpoint one topic, but the biggest thing that kind of, as far as the topics I would address and what kept coming up was the bifurcated consumer, or the K recovery, as people call it. And, roughly defining it, it's that 200K and below income level seems to be trading down and struggling, much more concerned and on a tight budget. Over 200K, which let's just pause. 200K is a high number to be a kind of a splitting point. I know, but it just reflects just how challenging the market has been and how much inflation has impacted where the middle income consumer sits. So it's that 200K mark seems to define, are people still spending quite a lot, or are they trading down and on a budget? So that's the big one for me, Cyrille, and we can parse that however you want.
The K-shaped recovery, well, I'm not sure how viewers are looking at this. The K-shaped recovery, basically, that there's growth on the affordable end and of the spectrum, and also in the premium end, with the middle being squeezed, really.
Exactly. So Sprouts, is the premium grocer. They're doing very well. And then Aldi would be the discount grocer. They're doing very well. The middle road seems to be kind of where there's less traffic at the moment. And even getting into some of the specific spending habits, we're seeing people spending more for health and wellness, energy and nutritional drinks, and more for fruit and veg, more for meat and seafood, but they're spending down on staples and everyday essentials.
Yes. Now, and that is perhaps also linked, and this is US, of course, but linked to some of the trends that you see below, well, not necessarily below the surface, but GLP-1s have an impact on food spending, Make America Healthy Again. You had such a crazy year in the US in terms of changes in the food trends, basically, that driving sales. That is just,
it's been a busy year to be an analyst, I can say that much.
Absolutely. Yes. And on the European side, Maria, what's your highlight, low point, most notable event?
Before going to my pickup, just to wrap up with Tom's, the situation in Europe has had a lot of similarities to what you are describing, to the point that in one of the newsletters that I received, I read the following sentence: 2025 is the year when the middle disappeared. So, and that was about Europe. So I don't need to add anymore. But
may I add, sorry, I'm leaning forward here again. This happened in 2014 when we came out of a crisis. And we're coming out of a crisis again, a disposable income crisis. But I think we're seeing the same patterns.
I think the pattern is not very different. But if I have to add something different to what Tom said, and I have to stick to the world of food, I think in the case of Europe, what has surprised me most this year is the lack of recovery in consumption. Why? Because already in 24 we were seeing a recovery in disposable income, and we were expecting 1 year ago that as that sort of became more cumulative, we would see some kind of pickup. And it hasn't happened. I was looking at more and more charts, more and more numbers today, and actually total consumption hasn't been doing that bad in most European countries. It has been mostly non-durable consumption, what has been doing badly, and that is predominantly food. So this has been perhaps the thing most remarkable in our area of activity this year, how consumers have kept being sober and restricting their spending in food, and how consumption or spending hasn't picked up as we were expecting. Savings have picked up. Another statistic was looking at is percentage of households that claim to have difficulties making ends meet. This is only is an annual statistic and covers only 24, but actually the numbers were not too bad. They were much better than the previous recessions. However, I must say that they were slightly worse than in 21, when it was easier to make ends meet because people couldn't spend that much, because we were still sort of suffering from Corona. So it's a lot of sentiment, it's a lot of benchmarking against perhaps a couple of years ago when we had more money in the pockets in real terms. But nevertheless, it has been disappointingly poor in terms of spending in food and non-durables.
Yes. Now that is interesting, though I have to add, and I was looking to a deck that you actually prepared and is available for anyone who's listening to have a look at as well, on what the differences are from a country to country level. As in your home country, Spain, wasn't too bad this year.
The country, I mean, we talk about Europe because we have to make this session a bit precise, or not to extend it through 6 hours. But the differences among countries are massive. But Cyrille, this is just a reality. Growth rates, economic growth rates in Europe are very diverse.
Yes.
And Spain is growing relatively well. Germany is just not at the same pace.
No.
So that is one level. The other level is the socioeconomic mix in each one of the countries is also very, very different.
Yes.
You can't compare Scandinavia to the situation of, for example, Eastern European countries. It's radically different. And the third one is also the spending habits are very different compared to a country. So I try to give a general trend that more or less indicates the general path, but differences are extremely large. Say, for example, Germany, but France also is doing pretty badly. Spain is doing well. Portugal is doing well. So there are indeed very substantial differences within Europe.
Yeah, great to understand.
Another key point that Maria reminds me is just the spending disparity in the U.S., where the top 10% of consumers are accounting for 50% of spending. So that similar sort of shocking statistics, and that comes back to that spread that we're seeing, and that number just really surprises.
So the lesson is that, well, if there's a lesson from both of your stories, it is for food producers to not necessarily focus on those overall numbers, as in limited growth, but there's pockets of growth.
Absolutely.
Higher income in the US, Mediterranean countries, at least some of them in Europe. And also to avoid perhaps other places. Really interesting. So this is not one story. There's multiple stories within the bigger picture.
Indeed, but also even in Europe, keep in mind what Tom said and the sentence I reiterated. Even in the countries that are growing less, there are very interesting pockets of growth because the middle becoming sort of empty
Yeah.
and consumers polarizing into the most affordable and the most expensive ends of the sort of range. So there are opportunities everywhere, and there will be bankruptcies everywhere also. Let's face it.
Where did that come from? Bankruptcies? Sorry, what?
Well, people suffering, or entities suffering, or brands suffering. Let's make it a bit softer.
Okay. Wow. Okay. To add to this, as in of all the interesting stuff that we've seen this year, for me, and I think for most of the people here, was actually Liberation Day. The tariffs, Trump in the Rose Garden with this, how do you call them in the US, placards, or the bill, the board that he had with all the tariffs on it. It was phenomenally interesting because it was such a shock, and that is what it was. It was a shock to many, and I was in the fortunate situation to host a client event with 25 CEOs 2 days after Liberation Day, and just all the CEOs were, what does this mean? What's the impact? Is this going to be sustainable, all these tariffs, or not? And in that sense, we're now at the end of the year, so we can reflect a bit. I think for me, there's two things to highlight. One, we didn't see the inflation in the US, Tom, that we were expecting.
We didn't, and we also wrote a report about how we thought it would be more muted
Yes.
than expected. We were one of the few groups that actually called it pretty well. I give credit to
Pat on the shoulder here.
Yeah, we did the calculations to say, hey, this is how much it's going to flow through. The one thing I will note, though, is, well, two things. It's not a surprise. Trump talked about tariffs his entire campaign. So when he finally said, hey, tariffs are coming, it's like, there they are. What I think is continues to surprise people and executives and people in the food industry that I talk to is that they're still there. We haven't seen a lot of progress. Yes, yeah, and now it's kind of, we're getting select opportunities, but there hasn't been the cutback that we expected, where we'd see progress with the bilaterals and then tariffs cut back. It's been much stickier and more persistent. So now I think we start to see that those companies that have been shouldering some of the cost, they start to possibly pass it down more so. So that's something to watch.
And this is really interesting because, and we're not going to talk about the outlook just yet, but I did look at what our economists think about next year. And economic growth in the US is probably lower than Europe, really, but that is really interesting. And the second one, inflation in the US is likely to be higher than in Europe.
But Cyrille, one of the things I wanted to flag, and maybe I'm completely wrong, Tom, correct me if I am, is that ahead of the tariffs, there was a lot of inventory building where possible in the US.
Mm-hmm. Oh, yeah.
So that has an impact on inflation, deferring the inflation.
Yes.
So probably that's why the inflation was somewhat lower than expected. Yeah. But there is one limit to these stocks that are piled over there, and sooner or later, and there is a limit to the amount of pain the corporates can take. So it makes sense that if the tariffs keep where they are now, because it has also been a roller coaster, let's face it, if the tariffs keep where they are now, inflation will sooner or later hit the value chain.
So that is sort of the first point related to the tariffs that I find really interesting, as in perhaps the deferred or delayed inflation that will be perhaps also lower than many expected, but it might still come. The second one, and this is perhaps more from a non-food, more packaging-related angle, but packaging is used a lot in food, is how quickly supply chains adjusted. Currently, Europe is, well, suffering may be a strong word, but there's a lot of flows of packaging materials from China now coming to Europe. So being diverted, those routes basically have been diverted because originally these would go to the US, but now they've decided to sell into Europe. I think that, and there's more of that also in non-food. Quite a few decided on the spot to reroute ships and have to go to different harbors. So on the one hand, the impact is, from an economic point of view, is gradual and much slower than expected, but the supply chain impact and changes were pretty immediate. I think that is for me, lessons learned basically from when this happens next time. If there's a next time, then we know how quickly things can change.
Perhaps all the troubles that we had at the time of COVID and disrupted supply chains, etc., made already the companies much more agile in terms of implementing changes.
Without a doubt. I think many companies, I fully agree, many companies implemented structures to mitigate, to an extent at least, these type of risks. Yeah. Yes. Okay, let's end the menu section here. Thank you for those, well, how do you call it? Backward-looking thoughts. No, that's not the right way to phrase it, but you know what I mean. Looking back at 2025 and move forward to the specials, which is, as I said before, the best of Rabo Research, something that we've published recently as Rabo Research that is worth paying attention to and which we are happy to send to you, dear listener, dear viewer, to take a look at and for you to have all the insights, because we only give the highlights here. And for me, or for us, the key publication in the last few weeks is our animal protein outlook. So we're already going to look forward. And why animal protein? If you talk to any, especially restaurant company, and especially on the quick service side, they are suffering because the main product that they sell is a burger. And beef prices have been skyrocketing. So it is animal protein is really in the spotlight. So our outlook, I think, could be an interesting read for anyone who has been impacted by that. Tom, perhaps you can share your thoughts from a US perspective and what you think that is key in that report that you that for the audience to take away.
Yeah, I mean the US. So the beef market, we expect prices to continue higher. That's just because we still haven't gotten to that inflection point where supply is growing again. We continue to kind of see a grinding, no pun intended, lower in our cattle herd and overall supply for beef. And beef is just so big when it comes to like you said, burgers. So that those beef prices are going to continue to weigh on food service, on restaurants, on burger joints, and beef. Our fantastic beef analyst, Lance Zimmerman here in the US, what he reminds me every time is beef. People don't really substitute in the US. They don't trade down from beef. They might do a different cut, but they're not going to go and have a pork cutlet instead, or necessarily like a chicken burger, chicken sandwich. They want beef. They love beef. They love the taste of it. So it's just a matter of, are they going to go to the grocery store to buy it, or are they going to continue to go out? So beef is going to continue higher, but pork and poultry will see some marginal growth, is what we saw in that report. Not great. So prices still remain high. So no real relief there. But on a relative basis, we might see some slightly more affordable animal protein from pork and poultry. But like I said, that's not necessarily a trade down. But the animal protein prices are just so high here, and that's going to continue to weigh on the market, on the consumers, on the restaurants through 2026.
I think that's part of the reason why President Trump is supporting the cattle ranchers in the US, right?
He's trying to, but there's been a little bit of back and forth as he tends to do. We don't need to get into it now, but yeah, he's doing his best to try to pressure prices lower, but economics works. Supply just isn't really there. You can't force a lower price when if you don't have the supply necessarily.
No, which is partly, of course, caused by diseases, and without wanting to go very deeply in it, in that report there's a beautiful map to show which diseases are where, especially Europe, where there's plenty of diseases, whether it's in poultry, in pork, or in beef. Let alone in seafood, there's also diseases there. But it's impacting global supply. And then that is, that is really interesting. From a European point of view, the trends are similar. I mentioned the diseases. On the beef side, what I think there's a bit of rebuilding of herds going on. But I think one of the differences potentially between Europe and the US is that the move to poultry is clearer, and it's partly pricing, perhaps partly also consumer preferences. I'm not sure. But over the last years already, we've seen a quite strong increase in demand for poultry and away from especially pork, actually, and to an extent beef as well. And we're expecting that to continue, though adding additional supply, and with avian influenza, it's not that straightforward to get that all in order. So it's going to be a pretty volatile year again.
I fully agree with what you say, Cyrille, and we have seen that one of the drivers behind the shift to poultry has been actually food service, QSR,
Yes.
extending
Europe,
the
yes.
menus with chicken options. Chicken prices have gone up a lot, but still more affordable, much cheaper than beef. So trying to nudge the consumers to pick up a chicken alternative to a beef burger is quite interesting for them. One thing I added, and is because we are on the week we are, is the uncertainties related to trade agreements. Because we are now in Europe in the middle of the turmoil, whether the EU will sign an agreement with Mercosur that would open the door to some imports in Europe of Argentinian beef, for example.
Yeah, and Brazilian. Yeah.
It is not clear whether it will be signed this Saturday or not. It's very unclear. But even if it were to be signed, the relative amounts make it very unlikely that they will be big enough to bring beef prices down. So even more so because indeed in Europe we have the uncertainty of avian influenza and also pork diseases. But okay, in pork basically exports may go down, so eventually price will not suffer from that. But just to clarify, looking into 2026, that a lot of noise in the news, but probably very limited impact on prices.
Yeah. And to add to that, from a European point of view, I think it was this week when the Chinese announced tariffs on pork from Europe because of dumping reasons, which is another one. So the geopolitical, I don't know, playing field? No, but you know what I mean. Tensions, much better, are playing a role into into this animal protein trade and pricing going forward.
A lot going on there. It's just, a lot going on for the animal protein market.
Yeah, well, that's the thing. I picked this animal protein report for us to discuss, and then, there's so much info in that report. So that is why I urge the listener here or the viewer to reach out to us and get that report, because there's a lot of detail behind all of this. But the highlights are that prices high, volatility remains, geopolitical tensions very important.
Yeah. Meat is typically the center of most plates, so it's important for us to talk about and think about in the food industry what's going to come next year. Yeah,
I think the bottom line is that life is not going to be any easier to the off-takers, whereas processors or retailers, well, normally they go through processors or food service operators. When we think about animal protein, they are not going to have, perhaps they will not have a worse year, but definitely still a complex year with high prices.
Yeah. Yes. But that's, I was talking to one food service company recently, and basically what you're saying, the complexity is the new normal. That's, he said, for the last 5 years, the business has been much more complex than before because of COVID and inflation spikes and supply chain tensions and whatever. This comes back to the point of that companies are working really hard to mitigate all those risks and be flexible in their approach to sourcing, especially on the downstream side.
Agility and optimization, big
and not easy.
Big core competencies they need. It takes a lot.
Perhaps for our children, a career to aspire to in the long run. Great. This was the special section. Dear listener and viewer, please reach out to me or any one of us, cyrille.filott@rabobank.com, if you would like to have a copy of the report. Right, let's move to the made to order. And in this time, it's not questions from the audience or questions from our clients, but our outlook for 2026, which is going to be an eventful year, without a doubt. But what are the key events to look into? Let's start with you, Maria. What is it that you are going to focus on?
Look, there's so much uncertainty, it's difficult to pick up one, but I will pick up one. I am going for increased M&A. And M&A not only at full corporate level, but also at brand level or portfolio level. I think we are seeing more of that. It's already starting to cook. And the reason for me to pick up this one is it relates to the K-shape, etc., etc. Corporates of all segments in consumer foods are starting to focus on returns on investment, trying to drive growth. But to drive growth, often you need to sort of invest and money and management capability. So you need to focus. And I believe that will trigger selective portfolio divestitures.
Yes.
And also acquisitions on the ones that want to reinforce certain areas. And at the same time, we will see more companies. I already was talking about companies struggling, brands struggling, portfolios struggling at the different levels. And those probably will be targets for purchase or just simply disappearing from the market. But they can be an attractive also target for a new owner that can sort of, milk the brand, as we used to say in the past, or milk the portfolio, extract return from it if they can buy it at a relatively good price.
Yes.
Because one of the things that perhaps has been an issue for M&A activity was over-optimistic valuations, aspirations from the seller side. And I think now we are at a stage where after 1 year of lackluster demand, sellers must become a bit more realistic because they will need to if they want to focus on their parts of the business with more potential. So I will go for increased M&A.
And what would be a spanner in the works here? What could actually be the reason why it's not happening? So the increase in M&A that you expect?
Two things could be if stubborn valuations continue.
Yeah.
that means, nice, but no thank you.
Yeah.
We can still see part of that happening. And the second one is too high uncertainty.
That one, yeah.
Because we now are seeing some kind of, perhaps not ideal, but some kind of stability in the returns, in the turnover. That you say, okay, I can work with that and assume this is the new normal and take it forward.
Yeah.
But if we have more events that make this actual level of activity questionable, the uncertainty is too big, then, the risk rate that you apply in there is too high and then it's game over.
Yeah.
So we are already assuming, we both agree, all the three of us agreed, uncertainty is the new certainty. But if that even becomes too high, that could be a drag on M&A.
And what about interest rates, which usually is a big driver? For valuation, at least, perhaps not for M&A.
Yeah, for valuation it is. But I think in that sense, we can have a bit more clarity in the next few months, perhaps. And that can be, and there's enough projections. All the market analysts do reasonable projections on interest rates. So that is perhaps in terms of uncertainty, easier to overcome than the business volatility.
Yes. Okay. Tom, what do you see, and what's your prediction? That is the wrong word. With expectation for into 2026.
So I like what Maria said. My thinking though is maybe it's simpler, but I just say more of the same. The things we're talking about will continue. The bifurcation will continue. Tariffs will continue to come through at this rate, and then we see maybe a little bit of an uptick in inflation, a little more pressure on businesses operating, but overall that bifurcation, just in this market, there doesn't seem to be anything that's going to slow it down right now. So we just see that trend continue going forward. So more premiumization, more discounting. Those are the areas where we see that continuation. And so the companies that can really invest in the customer value, consumer value. And I'm not just talking about economic value, it's experiential value, it's nutritional value, it is economic value also. Those are the ones where we're going to see doing well, because Maria alluded to it. It's very targeted, kind of know your consumer. There's winners and losers, and those that are investing in that consumer and chasing that consumer are going to continue to see foot traffic. They're going to continue to see demand and continue to do better in this market, because people are spending more carefully, and it's just going to continue into 2026.
No, agreed. And
I
sorry?
I imagine you're going to ask me. You're about to ask me, and what would change that?
Yes. Well, I wanted to actually tag onto the functional ingredient story, but perhaps you can answer your own question there first.
We'll come to functional ingredient in a second. But so what would change that is more confidence. So we just talked about it with Maria. The opposite for, if we have more confidence for the consumer, they're going to start spending maybe more normally, and less cautious, less budgeting. Because when we look at their finances, they're not in dire straits per se. No. They're not confident in where we're heading, and there's no clarity. So they're just like, let's save up for a rainy day. So, a turnaround in certainty in the market, that could be, calming down geopolitically, tariff, some sort of development with tariffs that provide more certainty, inflationary, normalizing, so inflation to come down a little bit more at lower interest rates. All those things would help to kind of calm the consumer and bring them back to kind of a more normal spending pattern.
I fully agree with what Tom says. It also applies entirely to Europe, but in the sense of what could bring some more confidence to the European consumer. Once again, Cyrille, it depends on the country, but we have to remember that we have a few countries in Europe where uncertainties, and I mentioned it already several times, related to domestic politics, to fiscal policies, are now relatively high. Yes. We have a lot of uncertainty in France. We have the new budget in the UK that hasn't been particularly well received. And we have uncertainty about the economic growth in Germany, to mention just three. In the Netherlands, we still don't have a government in place. So this kind of lack of visibility also affects consumer sentiment and spending. Yeah,
to that one, I don't think we have had a government for at least 3 years now. Well, we had people, but let's not go there. But yes, we currently don't have a government. That's still being formed. Perhaps we will. Well, when this is being broadcasted in January, there will be a government. Who knows? Unlikely, but fingers crossed that something positive might happen there. The functional ingredients, I think, is going to be a big story. And in the US, it's already been to an extent, especially functional beverages. But I would expect that to increase even further. And this goes into also to part of my story. We might see a second leg to the GLP-1 story. And we are likely to see a second leg to the GLP-1 story. The Ozempic, Wegovy, Zepbound, Saxenda story, or anti-obesity medication. Why is that? And there's actually two reasons for that. One, Europe. It is now spreading like a wildfire here in Europe. Regulatory and environment really different, by the way, compared to the US. And prescriptions and all that. It's not as easy to get these products compared to the US. But take-up rates of about 5% in the UK now. Well, we're getting somewhere. And in other countries it's lower, but it is really spreading like a wildfire. And I think we will see the impact on the food sector in Europe for the first time. So that's part of the second leg. The other part of the second leg is US, and that it will be part of the Medicare, Medicaid, how do you call it, reimbursement? Well, at least it's part of the package. You know this better than I do. But for people that are on Medicare or Medicaid, the copay will be $50 maximum a month.
Yeah, much more affordable, way more affordable. So that hurdle for more Americans to get access to it.
I read somewhere that about 50 million, so there's 130 million people in the US on Medicare or Medicaid, of which 50 million could theoretically be eligible for this because of their BMI being so high. It's a different audience. It's a different audience to the first audience. So the second leg will be different, as in the calorie reduction will have a different impact than it had in the first round. But it could be significant.
It's still fewer calories.
It is fewer calories. But what we saw in the first round is this functional ingredients shift to, you know, more protein and perhaps more fibers and pre or probiotics. We may see that. We may see less of it. That is for me a bit of a question mark, because of the new audience in the US may not have the money to spend on those more premium type of food products.
The GLP-1 story is going to continue to be very relevant in the food industry next year. So that Medicare, Medicaid allowance is there, but you know, also a term that I've been hearing more of and I like is the halo effect of GLP-1s.
Yeah, absolutely.
So if one person in your household's on a GLP-1, you know, you're all kind of eating a little bit more GLP-1, so that, you know, more protein, potentially more, more functional ingredients around the house. So that could be a beverage products and things like that. So that halo effect, though, we're seeing it on households and friends and outside the house also. So, you know, you ask, hey, you're on GLP-1, what are you eating? What's the diet? And so you see a bit of that. So it's not just the GLP-1 users specifically driving change in purchasing. It's people associated.
Yes.
Perhaps,
so within the household, because, you know, the main buyer of groceries might be on GLP-1, and then the entire household has to eat a certain diet. And there's almost a societal phenomenon that people want to lose weight regardless, whether it is using Ozempic or by natural means. And that's part of this halo effect as well.
I have just thought to share here, because Cyrille, in Europe, if we follow anecdotal evidence, is also growing extremely fast.
Yes.
We have data from the UK, we have only anecdotal evidence from other countries, but it's growing very, very fast. But the point is, these consumers, these households, and this halo effect may be completely different in the US than in Europe. The consumption pattern is very, very different. So in the US, processed food is a much larger part of the total pie, and therefore consumers may go more for processed food that is healthier or that has functional ingredients. In the case of Europe, it may happen that the users and the halo, etc., go more for actually fresh produce at the expenses of no matter which processed food. So the same sort of development in demand may have different consequences in the overall shopping basket.
Absolutely. Now, so many in the industry are quoting the No Hunger Games study done by Cornell University, which shows that sweet bakery and savory snacks are the categories that suffer the most if someone in a household is using GLP-1s. That is in the US, where the substantial higher amount of muffins and donuts are being eaten compared to Europe. Now, well, true, right? And those might be impacted harder. So what the impact is here, and also with the different eating cultures that we have, ranging from Finland to Spain, that is just miles apart, the impact might be very, very different. So absolutely agree with your point. So yes, now, but then again, the GLP-1 story is going to have legs here as well. And I forgot. Apart from that's another part of the second leg, is that the GLP-1 pill will be introduced instead of having an injection somewhere in Q1 or Q2 in the US market, which makes application easier. Anyway, so that is why that story will remain important for us, and we will probably revisit in our podcast series into the next year. And you can hear that I'm wrapping up, because it is time to wrap up. This was another great session, wrapping up the year. So thank you, Tom, Maria, for your insights.
Thanks.
Always a pleasure.
Yeah. And dear listener, dear viewer, well, hopefully we will do the same podcast in December of 2026. And then you can listen back to this one and say, oh, but that outlook on the consumer, wrong. GLP-1s disappeared. Could all be the case. Who knows? But we believe that those are the key triggers for the next year. The key points in the news, M&A, the consumer and GLP-1s that will drive the food sector going forward. So, dear listener, thank you so much for downloading, streaming, viewing this episode of Consumer Foods to Go Wrap, and we're looking forward to bringing you a new one into the next year. Thank you.
Thanks for listening to this latest Rabo Research Food and Agribusiness podcast. To hear more up-to-the-minute expert analysis, search for Rabobank on your favorite podcast app and follow our channels. Visit research.rabobank.com for more.